Hello from Trend Signal for our review of the data and events the week starting the 9th of March. Big moves Friday last week following some strong non-farm payroll data or employment data from the United States. A rate rise now looks a strong possibility, and that's really the backdrop for the opening of the start of the week here in the UK and in Europe. Far East markets followed the US markets lower Sunday night, Monday morning. We had some fairly poor Japanese data. The fourth quarter GDP data revised down to plus just 0.4% after what was a disappointing initial reading of plus 0.6%. So not quite what the Prime Minister wanted there when he unleashed his unlimited QE that has been unleashed on the Japanese economy. Markets last week saw equities fall sharply Friday. The Dow Jones fell 276 points on the week, of which 278 were sustained actually on Friday post the unemployment or employment data. S&P as well, down 33 points on the week. That was 1.6%. Most of that sustained on Friday. The DAX, the German DAX, is definitely bucking that trend, up 132 points on the week. Although the market's fairly weak on Monday morning, the DAX obviously is benefiting from the significant sell-off in the euro. And in fact, the euro fell 360 points last week against the dollar. That's what, just over 3%, 3.2%. Sterling against the dollar or cable, that fell 4 cents, 2.6%, but less than the euro. So we've seen euro sterling tick lower still around the 72 level, which is what 138.80, 139 against the euro. The yen, that fell further against the dollar. The dollar-yen rate up 1.14 yen, or 114 points. That's just over 1%. Gold, big mover, down $47 on the back of the stronger dollar. Brent crude, to a certain extent, was also suffering with a stronger dollar, but more likely down to news that Iran may well be exporting again. So it's a big week for the markets. The much anticipated quantitative easing starts on Monday, that's today, which has been mooted and discussed for quite some time. Ironically, it's actually, according to the Financial Times, almost 6 years to the day that the United Kingdom started its quantitative easing program. So it's taken that long for the Eurozone and the ECB to come round to these extraordinary monetary measures. Let's have a look at the data for the week. After last week's deluge, there's not a lot really to discuss this week. We've got daylight savings, which basically means the United States have moved their clocks forward, which happened on Sunday, which makes the time difference now 4 hours, and that'll persist until we change our clocks here in the UK on the 29th of March. So we have 3 weeks of the markets opening earlier at 1:30 instead of 2:30. And that's the US stock market. But of course, all the other data points will be coming in earlier as well. Data that normally is released at 1:30 will come out at 12:30, etc. This week, we've got a meeting of the Eurogroup ministers. They're meeting on Monday. All the talk about Greece again, and will they have the criteria in place to meet the conditions of the loans, of the extensions, and that, I think that could come back to haunt us again at some stage over the next couple of days. We got a number of speeches this week. Mr. Carney from our own Bank of England is talking on Tuesday. We've got Mario Draghi speaking on Wednesday. So quite a lot going on in that respect. But other than that, there's not a lot of data out really of significance. Probably the most important one on Wednesday will be the manufacturing production here in the UK. We've got the regular weekly unemployment data in the States, and also retail sales. It's the core number, that rebounding sharply from the previous month. Plus 0.6% is the market consensus there. And then really we end the week with PPI, which is not a problem at all. That's cost of goods and services going in to production, plus 0.2%, so no signs of any inflation stoking there, of course. And then finally on Friday, we've got the prelim reading of the University of Michigan Consumer Sentiment, and the consumer obviously very much buoyed, strong employment data coming out, and obviously with the fall in petrol prices or gasoline prices, the US consumer has more money in his and her pocket. So another strong reading, 95.6, ticking up slightly from the previous month. So the rally in the dollar probably will continue. Stocks, not so clear, certainly not in the US. The market started pricing in with more certainty of a rate rise in the US at the June meeting. It all depends on the language that's used in the meetings in between now and then. That's it for the week. A slightly quieter week on the data front, as I say. We'll catch up again this time next week. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.